Hello, welcome to Real Estate Unleashed. I am your host, Regan Hildebrand with the Home Team Realty Group. Find me on all social media at Realtor Regan.
And I am Bridget Quinn, and you can find me on social media, B Quinn Realtor. Well, looky, who decided to be festive today?
Merry Yodamus.
Merry Yodamus. Oh, I like it.
Merry Grogumus, I'm sorry.
I'm the merriest in the galaxy.
And Mary is the way.
Go away.
Merry Grogomas.
Merry Grogumus.
Well, we are straight to holiday season.
Yes, we are. We are in the middle of it now.
We sure are, B Quinn, Bridget.
Okay, Regan.
Oh, God. The holidays. The holidays are among us.
A fungus among us.
God. We record these on Monday, as we mentioned before. We release on Fridays.
Yep.
And Mondays are trying times sometimes. But hey, we had a good breakfast today.
We
with
had
some
a
other
fantastic breakfast.
local
Shout
real
out.
estate agents.
Yeah.
Shout out to, let's see who all it was. It was Joy Kaiser.
Michelle Wine.
And the team at A Measure Up.
Yep.
Yeah. So shout out to all those folks and more who put on a great little breakfast.
Delicious in my belly.
Yeah, we really appreciate that. Good little networking event.
Mm-hmm.
Yeah, it's always good to see how frazzled our fellow agents are this time of year. Swap war stories.
Yeah, absolutely.
So it was a good little start to the morning. Here we are, and
We're very Festivus now.
very Festivus. Yeah. Digging in today, little home aloneing. What?
Yeah.
Yeah, so today's episode is titled A Home Alone.
Mm-hmm.
And we're going to talk a little bit about what it's like to buy your house alone or feeling like you might be alone.
Mm-hmm.
Maybe it's first time buying. Maybe it's just getting out there on your own, jumping into the
New
world of
chapter,
real
new
estate.
adventure.
Yeah, whatever it is, though, it can be a little overwhelming.
It can be some scaries.
Can feel like you're walking into a booby trap situation.
Absolutely. Sometimes it'll feel like you get hit on the face with a giant iron.
Or a bowling ball.
Yeah.
Or
Light
step
your head
on
on
some
fire.
broken ornaments coming in.
Mm-hmm.
Feel a little bit like a heist.
Yes.
The Wet Bandits can be many things analogous.
Oh, that's
in
so
real
classic.
estate. But whatever the case is, we just want to talk a little bit, because I don't know that we've really dove into it in much depth before, what it's like if you really are just feeling like a little kid in a toy store, like Home Alone 2.
Oh. Lost in New York.
Lost in New York. Sometimes you're not always staying in a luxurious, what's the name of that? The Plaza.
The Plaza Hotel with the talk boy.
God. Do you know, little fact, completely unreal estate related, that thing wasn't real, but then like Mattel or somebody made that after they made it real. Yeah, but whatever the case is, so yeah, we wanted just to get back on track. We're going to just kind of, maybe you're listening or watching, and if you are watching, subscribe. Whatever the case is, if you're getting out there, and let's say you're right out of school, whether, high school, trade school, college, whatever, or you're just venturing into what you think is like adulthood, and you don't really know what to expect.
Sometimes it's overrated.
It is overrated. We regress naturally.
We do.
To a childlike state.
Obviously.
Exhibit A and B. Here, if you're listening and you're not visually seeing, we are wearing our not ugly. There's not ugly.
There
sweaters.
is nothing ugly about wearing Star Wars sweaters.
Right. But whatever the case may be, if you're venturing out into adulthood, and you're getting your first real big boy,
real taste of the real world,
real estate home, condo, whatever it might be, it's going to be overwhelming.
Sure.
You're going to feel like mom and dad flew off to Paris with all the other people and left you alone, and you got to buy a house. What does it really entail? Mm-hmm. Like, what are the myths about buying your first house?
Well, I know a giant one is everyone seems to think old school, you got to have 20% down.
Yeah, down payments. Overwhelming, and I think maybe we've chipped a little away at that 20%. I don't know though. I would like, if you have heard that all your life, leave a comment. Let us know. A little audience survey, right? 20% down. It's not 20% down?
Not at all. In most cases, it's very, it depends on what type of loan, where you're located. If you're getting in the middle of farm country, obviously it's a little bit different than buying somewhere in the city. But, very little down to 3.5% or 5% are pretty common.
Yeah, 3.5% and 5% are very common. In fact, I think most people opt for those lower down payments to keep the money in their pocket for other things, whether it be, furnishing the house, renovating.
Well,
right?
And I think most people know too, like you can always pay more into your payment.
Yeah.
So save it on the front end and just
chip away later. Yeah. So if you get a 30-year loan, which is probably the most common, I'm sure it is the most common loan, and you make one extra payment a year. So let's say your mortgage is $1,500, and you make one extra $1,500 payment. That's always going to go to the principal.
Yep.
And your 30-year loan then becomes a 17-year loan.
Yep.
And you've built equity a lot faster. Extremely fast. But little things like that I think new buyers, you're not expected to know it. There's never a situation where a buyer should be expected to know all this.
It'd be nice if there was like a class learning in high school and college of like preparing to be an adult and cover some of these things, to dispel those myths and
the whole just to actually open up people's eyes to it, right?
Because there's so much that you don't know until you find out,
and sometimes the
hard way, as you say. With that paint can straight to your face.
Tar on your feet coming down the stairs. Whatever the case is, it's the 20% down, definitely a big myth. You can put 20% down
for sure.
You'll have a lower payment, obviously.
Yep.
But you mentioned if you're living out in farmland, there's USDA loans, which are a government-backed option.
Yep.
That if you meet certain income requirements are a great way to have no down payment whatsoever. Yep. There are some credit unions. Yep. That offer no down payment. They sometimes come with little strings attached.
Yeah, sometimes a little bit higher interest, but...
Or it might be an adjustable rate that can go up after 5-7 years. But there's options if you don't want to have any down payment.
Yep.
There's options for lower down payments, 3.5%, very common with FHA. Even
we're starting to see more and more of those now with being accepted, at least on the buyer side, because before we had talked about previously that it was... basically, unless you had cash, it was very hard for so many buyers to get something accepted. So now is the time. Yeah,
if you are stepping into that, going in alone into the home buying experience, you don't have to be alone. That's what we're talking about today. You have those options. If you're a veteran and you served, and there's a few little gotta-haves.
Small caveats.
Small things. Got to do your complete service and that sort of thing. Certain years of enlistment that are required. But either way, you have an entitlement that opens you up to a VA loan.
VA loans are so good to work with, too. So strong.
They're so strong. No money down on primary residence. And you get to go in with a very competitive interest rate, maybe one of the best.
The VA loans have been my best ones. Again, this was during the heyday, but they were 2.3 at one stage. When everybody else was like, say, 2.75, but it was crazy. Yeah, and people get so worried that there's going to be all these VA rules. They're not even rules with the VA. Like we talked with one of our lenders, Michael Frazier, who was telling us, it's a guidebook. It's not even a rule book. Right.
And you have humans behind the scenes that, because they're advocates for veterans.
Things,
yeah. So if you've served in the military, armed forces, you've got that option for you that might not be known. If you're looking into the more rural areas, USDA. If you qualify for a credit union, which most people do.
That's why I always generally tell people to, if you're a member of a credit union, get a quote from a credit union. You can get a quote from a bank and get a quote from a mortgage lender, because each one is going to have something a little bit different for you. And then we can talk and educate you through the process to kind of, once you figure out where you want to be, about maybe which one of those might be your best bet. Yeah,
there's so many factors that go into it. People get tripped up thinking, oh, that bank, that lender, that credit union, whatever, had the best rate.
Yep.
What they don't understand is the back end pieces that we know to look for.
Right.
What kind of origination fee are you being charged? Which is, that's the money that the bank or the lender makes as, their basically like a commission.
Application fee, sort of.
And, or, then are you being charged points? That's a whole nother beast.
Yep.
But all these things we look for, you can ask for a rate sheet from these lenders, and we'll break it down for you to see what really is like your best out-of-pocket deal.
I would say in the process, to me, getting started as a home buyer is probably the hardest. And with that is getting qualified. It's the hardest, and I think the most important piece of the whole puzzle.
And overwhelming.
It is, because you don't know, and I mean, I can tell my own stories, but it's just take it from us that's where you want to kind of spend the time is talking to a couple different people, talking with your realtors, and getting to explain that process so that you feel comfortable. And then, the house buying part's the easy part.
It's easy. Yeah, I mean, because you can visually see, once you start touring, we like this, we don't like this. Then we start to narrow it down, find the right one. We're not in a stupid competitive world now.
Yep. And we've talked about when you know what you're qualified for, you can look within that range too. Again,
you've narrowed it down even further. Yeah.
If you're, qualified for $250, you don't need to be looking at a house that's $350.
Yeah.
Or vice versa. So, you need to know what your buying power is and understand the ins and outs to get started, so to speak. So.
And that buying power piece, you're so right. Like, that's what people need to have. I just had a former client different little situation, but long story short, they reached out yesterday via text and said, we want to get started with the new house. We want to know how much we can buy. That's the right question to ask.
Sure.
How much can I afford? That's your buying power. If you already know what you have in mind budget-wise, let's say you're paying a rent that's $1,700 a month, well, you can start and work back from there. We want to stay within our means. We don't want to pay more than we're paying now.
Right.
So we want to pay $1,700 a month. Well, we put you in touch with the lender.
Yep.
They say, well, yes, you're qualified to pay $1,700 a month.
Yep.
Then we work backwards to what that translates to purchase price-wise, with all the other factors involved.
Taxes, insurance.
Maybe a mortgage insurance on top of that. All these little pieces, homeowners, HOA. So you're right. That's the best piece of advice.
It's the most important piece of the puzzle, because without it, you don't close on your house.
No, you don't. You just don't. It doesn't move. It doesn't move anywhere. Nothing happens.
No, nothing.
You don't get in the door. You don't get past Kevin's booby traps.
Well, let me say, as a kid watching that movie, it was like, wow, that is a fantastic house. Now watching the movie, I'm like, how does Kevin's dad pay for this house, this mortgage? Goodness.
Yeah.
Let's hope he bought it when the interest rates and the price was low.
Hopefully paid it off. It's maybe he has some good investments back in the 80s.
Different eyes now when you're older.
Jeez. But yeah, to your point though, getting that buying power, 3 pieces that I think most people need to know and that add into your ability to qualify, right? Yep. Credit score. Everyone thinks about credit score. But I will argue, and there might be some people that want to argue back, and it's subjective, credit score is probably the least important piece of that.
And I agree with you too. I mean, credit is super important because credit can help you get a better rate and get better deals and different things. But just because you don't have the best credit, it's just, there's other ways to be creative around it. We can fix credit or tell you how to. Not us personally. We have people for that, because
not me.
I don't know. I'm not going to tell you.
We can put you in the right place to get it fixed.
Yes.
And it's not through one of those 800 numbers or one of those advertisements. Our lending partners have tools to help you with that.
And if that's, they'll tell you, okay, if you do these things, maybe in 3 months' time, you're in a good position, or it's something, that's going to take longer, they'll tell you.
Yeah. It might be 30 days. It might be 3 months. It might be 6. Either way, we know that we can work that kink out. And if you don't have any credit, if you really are the first time buyer and you're really coming in with nothing established, that's not a hurdle either.
No.
And that's also a big misconception is, well, I don't have any credit. I'm brand new out of school. I don't even have student loans. Or maybe student loans are all I have.
Mm-hmm.
We can still get you there through the same kind of process, establishing credit quickly.
Yep.
And build it. So I would put it's the easy, it may not be unimportant by any means.
No.
But it's the one that we can usually work around.
Work around. There's different, as I say, if you have bad credit and you're working on your credit, there's certain lenders can work their magic and do certain things or, try to assist you to make that easier. So as you say, it's important, but it is still a piece of the puzzle that,
And, everyone has their own little stories about credit and miracles being worked. Mm-hmm. One of my first deals was a 574 that closed on time. Did they get the best rate? No. But they got into the house they needed to get into. They knew they were working towards the right path. 6 months later, refinance at a better rate. So, and I've heard plenty of the low 500s as well. It ain't pretty.
No, it's not pretty. It's not for the faint of heart. But if there's a will, there's a way.
Bingo. But yeah, number 2 that I would put there is the DTI. So, debt to income ratio. How much do you pay out towards your debts
expenses,
versus how much you have coming in on a monthly basis.
Right.
So student loans are a factor in that. They actually can be tweaked a little bit. New guidelines. So if you're not sure, reach out. We'll put you in touch with the right people. But car payments, I think people screw up so badly.
Car payments is I would say is what hurts people the most.
If you're paying 4 digits in a car payment each month, we got a problem. Unless you have a lot of income coming in too.
Yeah, no.
But for first-time buyers, it trips them up. It's so easy to get a car, and you got to remember the car lots are not on your side when it comes to helping out your position on buying a house.
No.
But remember, whatever you have coming in, we have to have a higher amount. We have to have a higher amount coming in than you have going out. Mm-hmm. And typically, what we like to see is below 50%.
Yep.
But even if it's higher, like let's say your debts are $10,000. I'm sorry, your income's $10,000. Then that means your debts need to be less than $5,000.
In theory, yes.
In theory, but there's again ways to tweak it, and there's different rules based on which kind of loan you're going into.
Yep.
So we can work around it. The third piece that we can't really do much to help you with on our end, at least, is employment. You either are or you're not. Right?
Yeah,
unless you want to become a real estate agent.
Well, that's also not for the faint of heart.
That's not for the faint of heart. And then you got to wait 2 years. Because self-employment, for those that don't know, if you're self-employed, which most real estate agents are, then your income usually has to be in place for a couple years.
Yep. It's totally different.
Yeah, totally different. But if you just have a regular old job, as long as we can prove that you're employed, that your income's steady, it gets a little bit different with weird scenarios like
commissions and different stuff work completely different.
Commissions, self-employment, Uber, Lyft drivers, that's a whole nother beast. But either way, we can't really do as much to tweak there. You either are or you aren't.
You are or you aren't.
It is or it isn't, whatever your income is.
This is the way.
Yeah, this is the way. And sometimes if you're not on the way, then... But the other two we can help with, yeah. So 3 things, again, just to recap, that everyone understands, that goes into your qualifications is that credit score, debt to income ratio, and employment. Yep. If you got those 3 things and you feel good about them, why aren't you buying a house?
It's true.
Why aren't you buying a house? I would say the thing that got me worked up the other day is I saw some investor, like I say investor, not a home investor, like a crypto hedge fund guy, in a TikTok going off about how it is a horrible real estate market. No one should be dipping their toes in because it's all about to come crashing down. The C word.
No, okay.
And you're rolling your eyes, and I rolled my eyes, and they flipped over.
Yeah.
My eyes crashed. The market's not crashing. I know that's just our opinion.
I can see where it appears that way, but it's not. It's settling back to reality.
Exactly.
It's just...
his whole thesis was the hedge funds are exiting the market. And yeah, so what if they are? We still don't have a situation anywhere close to what we had in the last real crash, which was mortgages being approved where they shouldn't have been.
That was a lending issue.
Yeah, it was all on the lending side. It was all on regulation. Industry regulation was out of control on the mortgage side of things. We don't have that.
No.
All we have is we either have inventory that's being sold or isn't being sold, or people that are or are not buying.
Yep.
That's all there is. But people still need homes.
Yep. People always need homes.
People still are qualifying for homes. I don't see anything happening in the market that indicates either one of those are tipping, you know? So a crash, no. And I'll go to the mat on that. I don't think we're going to see one.
No.
We can have slowdowns. We can have pickups.
As we say, it's that S word. It's been shifting, and that's all that it is. And it's real estate and everything else is cyclical. So it always goes through, the ups and the downs, and it balances out. And
exactly.
So,
and when the question comes up is,
don't be tripped up by that. Don't fall for the traps, the booby traps, and
it's FUD, fear, uncertainty, and doubt. And those people are putting that in your mind because they want you to not be competing with them.
Right.
So don't fall for it. The other thing that I think gets people worked up is now the right time to buy? Yes. If you're renting, it's always the right time to buy.
Yeah.
There has never been a historical situation where this market has favored real estate, has favored renting.
No.
It just doesn't work out.
No.
I don't care if you're paying 7% interest. You're still putting equity in your own pocket.
Exactly.
Unless you're buying a house you're buying for above appraised value and you don't have any equity in the foreseeable future, you're always coming out in the pro column.
Yeah.
No situation.
No situation.
It's frustrating. But obviously we have a vested interest. We want to see the market keep going.
Sure.
Because it's our jobs.
Well, yeah.
But we're also fiduciaries because we're realtors.
Mm-hmm. Well, offering the best advice and, try to hold your hand and take you down the right path. And,
Yeah. And that's part of it. Like, to make sure you don't walk into a booby trap situation. No. Get your head slammed by an iron or a bowling ball going up the stairs.
No.
On the path to home ownership.
Mm-hmm.
That's all we're here for. That's what we're trying to do. Make the Christmases brighter.
Yes.
One ugly sweater at a time. Not ugly.
Well, these are not ugly, though.
Grogu. Baby Yoda.
Baby Yoda. Baby Yoda. Baby Yoda.
I can work with that.
Yes.
Work with that clip.
Oh, thank you.
Viral audio coming at you.
Oh my gosh. But no, like, in all seriousness, like, it seems scary, you're on your own, you're having to go to the grocery store by yourself, put on your big boy undies and go and carry the groceries and make it home. And yeah, you may drop the groceries along the way, but you get there and you did it.
You did it. You fought off the Wet Bandits and you own that house. Until Dad comes home. But
we can come play in our polka music. We'll get home.
We'll rescue you. Yeah. So, that's the piece. Have somebody in your corner that understands it. You and I together, I know we have always drifted towards the first-time buyers, right? Like
I love first-time home buyers because I think we have, our own stories and then stories from other clients, and just try to prepare. As I say, we've talked about it a gazillion times. Prepare for the worst, hope for the best, and then talk through the reality of every situation. And we'll figure it out.
That's it. We always figure it out. We always where's the jingle, there's a way. We'll jingle all the way. So if you have questions, leave them in the comments. Reach out to us. All of our contact information's at the end of the video or down and below in the description. If you're listening on your podcast, then it's in the descriptions as well. We're happy to help you. If you're not represented currently by an agent, we'd love to be that person that guides you. If you're not in the North Carolina, South Carolina area, we'll hook you up with someone that is. And we'll get you there. So I think we got something really big planned for next week. Right around the corner from Christmas.
Where we go?
Santa is coming. So we look forward to seeing you on the next episode. Obviously, you will be able to find the next episode if you subscribe. So click that button, give us a like.
Give us a like, share, add your comments.
Reach out. Find us on Instagram. Instagram, TikTok.
Little fuzzy balls. I don't have any.
The fuzzy little cotton balls with some stuff that's already falling off. But hey, it's okay.
It's okay.
It's baby Grogu. All right. Thanks, guys, for joining us. As always, I'm Regan Hildebrand with the Home Team Realty Group. Find me on social media at Realtor Regan.
And I am Bridget Quinn, also with the Home Team Realty Group. And you can find me on social media, B Quinn Realtor. And as always, we'll catch you next time.
Thanks, everyone.